Okay, welcome to Protect Law Group's second video on SBA charge-offs and referrals. If you have an SBA-backed loan and you're in default, what you're facing is, you're facing the power of the United States government to recover that debt. That means a lot of your assets are at risk. That means your house is at risk, your savings are at risk. Any other assets you might have within certain limitations, tax returns that you might be owed are at risk, a portion of your wages if you've gone out and obtained a job, and certain federal benefits are all at risk when you have a default on an SBA loan. Protect Law Group, we are a group of experienced attorneys dealing with SBA workouts and specifically offers and compromise, wherein if you meet certain requirements, you can settle your SBA debt for a fraction of what is owed. We're all experienced in this. We're all admitted to the United States tax court as well as several bankruptcy courts. So what we're going to cover today in this video is our SBA charge-offs and referrals to Treasury. Now, a charge-off is when the SBA removes the outstanding balance of a loan from its accounting records. You see this a lot with people who have negative credit histories. You'll see on a credit report, for instance, a credit card company has charged off their debt. Well, this is an accounting mechanism. It does not mean that you no longer owe the debt, okay? So point number two is the charge-off has no impact on the borrower's liability for the debt or the SBA's right to collect the debt. All right, so just because you've been told or you've read or you've been informed that your SBA loan debt has been charged off, that doesn't mean you're not liable for it. Charge-off usually occurs when all reasonable liquidation efforts have been spent. The estimated cost of additional recovery exceeds the expected recovery, so it's going to be charged off if the SBA figures it's going to cost $10,000 to recover $2,000. The remaining obligors, that is the direct borrowers, the guarantors, etc., cannot be located or are unable to pay the debt deficiency. And lastly, the loan balance is uncollectible because of a compromise, a discharge in bankruptcy, and expiration of the statute of limitations or other defenses available. So what happens after charge-off? After charge-off, the debt will be referred to the Treasury Department. And the Treasury Department will pursue any further collection efforts. Prior to referral to the Treasury, the SBA sends anybody who's liable or potentially liable on the loan a due process letter explaining that the loan will be referred to the Treasury for collection unless payment provisions are made. Maybe an offer in compromise, maybe some sort of payment plan. If payment provisions are not made within 60 days, then the SBA refers the loan to Treasury. Once it goes to Treasury, then you are dealing with litigation to collect the debt, and remedies that the Treasury has available will include the following. Levy on your income tax refund. So if you filed your taxes, you're going to get a $20,000 refund. That can be taken away from you. Levy on your federal, military, or retirement pay. Levy on federal contractor or vendor payments, levy on federal travel advances and reimbursements, levy on benefit payments that are not exempt from offset, such as Social Security. And amazingly, the list continues. You will get reported to a credit reporting agency. That means you're going to have a negative mark on your credit report for as long as 7 years. You'll get reported to the federal delinquent debtor databases, of which there are a couple. You can have your wages garnished. So if you've moved on and now have you're working as an employee, you can have your wages garnished. They might transfer the debt to a debt collection agency. They can request the Department of Justice collect the debt, and you could also be banned from getting additional federal financial assistance. So as you can see, once it goes to referral to the Treasury, uh, there are a lot of ways to collect, and it is much harder to do any type of settlement or offer in compromise once your loan has been referred to Treasury. So we here at Protect Law Group, we can guide you through the offer and compromise process with your SBA loan before your loan is referred to Treasury, when it's still in the hands of the CDC that you dealt with and the SBA. It's much, much easier to do some sort of workout and offer and compromise some sort of payment plan. We have helped many borrowers obtain satisfactory offers and compromises on their SBA loans. So feel free to give us a call today for a free evaluation at 1-888-756-9969 or look us up on the web at sba-attorneys.com. Thank you very much.